Good afternoon, ladies and gentlemen. It's my pleasure to welcome you on behalf of Linc Limited and SKP Securities to Linc Limited's Q3 FY24 earnings webinar. We have with us Mr. Deepak Jalan, Managing Director, Mr. N.K. Dujari, Director of Finance, and Mr. Sanjeev Sancheti from Uterus Advisors LLP, the company's IR advisors. This webinar has been recorded for compliance reasons, and during the course of the discussion, there may be certain forward-looking statements. These must be viewed in conjunction with the company faces. Viewed in conjunction with the risk that the company faces. I now hand over the webinar to Mr. Jalan for his opening remarks, which will be followed by a Q&A session. Thank you, and over to you, Deepak.
Good afternoon, ladies and gentlemen, esteemed investors. Thank you for joining us for our Q3 FY24 earnings call. We appreciate your continued support and trust in Linc Limited. In the third quarter, we face an unusually challenging market environment, yet our performance offers a perspective of stability and strategic foresight. It is important to note that our domestic sales remained stable, a testament to our brand's resilience. This stability is particularly noteworthy given that the third quarter of the previous year, that is Q3 FY23, saw us achieving an impressive 22% growth over Q3 FY22. Sustaining such high growth rate year on year is a little difficult, and hence our performance this quarter must be viewed in the context of this higher base. Additionally, this year's festive season, traditionally a period of lower demand for our category, was spread over 2 months, diverging from last year's concentration within a single month. This extended festive period naturally influenced consumer purchasing behavior, leading to a prolonged phase of subdued sales. In response to discounting strategies by competitors during this period, we chose to prioritize the long-term health of our brand and profitability. We believe in maintaining the integrity of our brand and the long-term value we offer to our customers. Therefore, instead of engaging in immediate reactive discounting, we strategically planned our promotions for the fourth quarter. These promotions are designed to enhance our market position thoughtfully without compromising our core values or profitability. We are excited about our upcoming initiatives in the next quarter. These tailored promotions are not merely reactions to short-term market fluctuations, but part of our enduring commitment to delivering exceptional value to our customers while preserving our brand's premium position. We are confident that these strategies will address the immediate market challenges effectively and fortify our market presence and financial performance over the long term. On the export front, while our overall exports remained 12% below the previous year, Linc saw a remarkable 33% quarter-on-quarter growth. This recovery was driven by the company's agility and strategic diversification. We successfully entered new markets like North America, as mentioned in our previous call, mitigating the impact of losses in 2 of our major markets, which were adversely affected by political instability and conflicts. This not only boosted short-term performance, but also positions the company for future stability and growth. expansion into Kenya further enhanced our export performance. Our efforts towards actively exploring new export markets and optimizing our presence in the existing ones continue. And we believe we will be able to attain near full recovery of our export volumes by the end of this financial year. Despite the challenges in the quarter, Pentonic displayed resilience, achieving a 5% YOY as well as sequential revenue growth. This performance is even considering its revenue contribution expanding from 30% in FY23 to 33% in 9 months of FY24. As a high margin product for Linc, Pentonic's success fueled a 244 BPS increase in gross margin and a 164 BPS rise in operating EBITDA margin compared to the previous quarter. As we continue to innovate and expand our product portfolio, I'm excited to share updates on our eagerly anticipated new product launches, which reflect our commitment to quality, consumer needs, and market expansion. Firstly, we have the Pentonic GRT, the retractable gel pen priced at ₹40. Initially test launched at the beginning of the current financial year, we identified opportunities for further refinement to ensure the product meets our high standards of excellence. After some fine-tuning, the commercial rollout commenced in late January, and we are now gearing up for an all-India launch within the first quarter of the next financial year. Notably, this product has already made its debut in international markets with our first export shipment, signaling its potential for global appeal. Next, we are preparing to launch the Pentonic Evo, a pocket-sized gel pen that combines convenience with the writing quality our customers expect, priced at ₹30. Scheduled for introduction in March, we anticipate completing its nationwide rollout within the first quarter of the next financial year. Similarly, the Pentonic CLR, a ball pen at ₹20, is also slated for launch in March. This product is designed to deliver superior writing performance at a more affordable price point, with plans to complete its domestic launch within the first quarter of the next financial year. Lastly, we will introduce the Linc Q ball pen, priced at ₹10, embodying our commitment to providing high-quality products at every price segment. Its launch is also planned for March in select markets. These strategic product launches are not just a testament to our innovative capabilities, but also align with our commitment to diversifying our portfolio and strengthening our market presence across various price segments. Despite facing some delays due to teething issues, our team's dedication ensures that each product not only meets but exceeds our expectations before reaching our consumers. In addition to the exciting new products, I'm pleased to share that our innovation pipeline extends further into adjacent categories, showcasing our ambition to broaden our portfolio and enter new markets. Our team has been diligently working on developing these products, which we are planning to launch in the next financial year. This expansion is not merely about growing our product range, it's a strategic move to capture new segments, respond to evolving consumer preferences, and reinforce our position as a market leader. Our R&D team has focused on ensuring that these products not only embody the quality and innovation Linc is known for, but also address unmet needs in the market. We are optimistic about the potential of these new introductions. Based on our projections and the strategic positioning of these products, we anticipate that they will collectively contribute approximately 10 to 15% to our overall revenue in the new financial year. We look forward to sharing more details about these products as we approach their launch dates and are excited about the impact they will have on our journey forward. As we look ahead, our long-term growth outlook remains decidedly positive. The core fundamentals driving our growth are robust, underpinning our confidence in the sustainable trajectory of our business. While we acknowledge the possibility of short-term fluctuations, it is the long-term horizon where our focus and confidence lie. The demand outlook for our products continue to be strong despite occasional headwinds. We are positioned well to navigate through these and emerge stronger, backed by our strategic initiatives and the inherent strength of our market offerings. Thank you for your continued support and trust in Linc Limited. We are committed to navigating these market dynamics together, emerging stronger with a focus on sustainable growth and enhancing shareholder value. Thank you. And now I would like to hand over the call to Mr. Dujari to provide updates on financial. Thank you.
Thank you, Mr. Jalan. Good afternoon, ladies and gentlemen. Many thanks for joining the Q3 FY24 Linc Limited Earnings webinar. I will give a brief overview of the financial numbers for the quarter gone by before we open for Q&A. During Q3 FY24, the company's operating income fell by 0.5% year-on-year and 5.5% quarter-on-quarter to rupees 124 crores. The gross profit of the company stood at rupees 39 crore as against 41 crore in Q3 FY23. Although our gross profit margin fell to 31.5% from 33.1% in the same quarter of the previous year, we view this as a temporary, as we experienced dip in our higher margin export revenue. However, gross profit margin improved sequentially by 2.4%, largely due to increase in share of Pentonic revenue as well as recovery in export. Operating EBITDA margin also improved sequentially from 9.6% to 11.2%. Q3 FY24 PAT stood at rupees 7.5 crore as against rupees 11.1 crore in the previous year same quarter and as against 7.7 crore in the Q2 FY24. The PAT margin stood at 6.1% in the quarter gone by as against 8.9% in Q3 FY23 and 5.8% in Q2 FY24. The company continues to use its free cash flow judiciously and in the process able to reduce its net debt significantly in the last 5 years. From a net debt of rupees 62 crores in FY19, the company now has a free cash of rupees 21 crore as on 31st December 2023. We continue to remain focused on our long-term goal of sustainable growth, profitability, and a strong delivered balance sheet. With this, I leave the floor open for Q&A. Thank you.
Thank you, Dujariji. We'll wait for a minute while the questions line up. Friends, anyone wishing to ask a question, request you to unmute. We'll unmute you and then please raise your hands. The first question is from Zaki Abbas Nasir. Zaki, please unmute yourself and go ahead.
Good evening, sir. Good evening, Deepak bhai, Sanjeev bhai, and Dujari ji. I mean, it's always a pleasure to be on the con call of Linc. Uh, I mean, it's been a wonderful journey for you, and we've been viewers of your success, sir. Deepak bhai, we were anticipating 2025 to be around 750 crores. So, could we safely assume that this target has been postponed by a year, sir? Would that be postponed to 2026? That is my question number one, sir. And question number two would be our relationship with Delhi, sir. What direction would that be taking?
Okay, Zaki bhai, thanks for your encouraging words. Definitely looking at the numbers of first 9 months, I think this 750 crore target will be pushed to FY26, which is quite evident. And so your estimation, I would say, is quite reasonable. And secondly, so far Delhi is concerned, as I have also mentioned in our previous conference calls, we have an exclusive distribution arrangement with Delhi for the Indian market. And we are even talking to produce some products like calculators in India with their help. So the relationship is deepening, and both the parties, whether it is Linc or Delhi, both are quite happy about the relationship.
Fantastic, sir. And another small thing, sir. Pentonic being the success that it has, would you be at any time looking at a brand extension of the product, sir?
So definitely, as I mentioned in my opening remarks, we have to see, Zaki bhai, to have a sustainable growth, we have to either, get into newer categories. So that's why, as I mentioned, that we are already working on some adjacent categories which fall within the broad category of stationery. So we can leverage our existing, distribution. So we are actively working upon those categories, and within I would say first half of next financial year, we will be able to launch some of those products. So this is how we intend to expand our Pentonic portfolio as well as Linc portfolio. So so the contribution of these new products, including the 4 I mentioned in the ball pen and gel pen category, they are going to have a significant contribution in our next year's revenues.
Thank you, Deepak bhai, and best wishes to you and the team. Thank you, sir.
Thank you so much.
Thank you, Zaki. We take the next question from Pratik Dedia. Pratik, please go ahead.
Hi, am I audible?
Yes, Pratik, please go ahead.
Yeah, sure. So my question is, you mentioned that you expect export recovery by Q4. So is there an expectation that you'll be adding a new market?
Pratik, may I ask you to be a little louder, please?
Okay, is this better?
Yes, this is better.
Okay, yeah. So my question is regarding export recovery. You mentioned that Q4 you expect export revenues to bounce back. Do you expect to add a new market, or you expect existing export markets to rebound?
So as I even mentioned in my earlier conference call also, and even in my opening remarks, we lost 2 markets in this financial year, and as a consequence, we have a significant deficit because those 2 are our large markets, and that happened due to their political problems, nothing to do with us. So we appointed a distributor in North America, which I also mentioned in my earlier communications, and so we've already started getting orders from the customer, and we've actually made one shipment already in the Q3, and there are a couple of shipments lined up in the Q4. So basically, this deficit is going to be fulfilled with such new customers, more particularly with this new market opening for us.
Okay. And in the new market, do you expect margins to remain the same as what we had?
Yes. So luckily, in the US market, we have decent profits, and as I mentioned that earlier also, that in exports we have at least 5% better margin than the domestic margins, and I'm saying at least 5%. So we have quite a decent margin, in this market.
Okay, got it. All right. And my second question would be in regards to the 750 crore revenue that you had looked at. Do you feel that even with new product launches, you will not be able to achieve that in FY25?
So yes, definitely we revised our guidance in the last quarter in view of first 6 months performance, and so the revised guidance indicates that we should be able to achieve that 750 mark by FY26, and I like to stay at that position, and we may like to discuss on this once again when we review the full year performance in the month of May.
Okay, got it. Thank you. And one last question. You mentioned that you were looking at adjacent categories. Any guidance in terms of what kind of products you're looking to launch? You mentioned FY25.
Yeah, so Pratik, I would like to be little, because this is an open forum, so I like to be a little, conspicuous on this.
Sure, no worries. No worries.
Category.
Yeah.
Definitely, we can discuss on this on one-to-one basis.
Sure, that is helpful. Thank you.
Thank you, Pratik. We take the next question from Vikram Mehta. Vikram, please go ahead.
Yeah, hi, good afternoon. My question was, do you think we've underperformed the industry in Q3 in the domestic market, or we've been at par, or we've outperformed? That's number one. And number two, what was the impact of petroleum prices on this quarter's margins? Thank you.
So, to your first question, Vikram, I know it's very difficult for me to really comment whether we underperformed, but so I have actually right now no idea how our peers have fared. But of course, we'll come to know in just next few days. Although on informal discussions with some of our peers, I understood that Q3 has been challenging for most of them. So actually, frankly speaking, this is something I'm not really able to pinpoint the exact reasons, but as I mentioned, that it could be that this quarter was the festive season was spread over 2 months, so there could be some reason. That could be some reason. So, but yeah, definitely we are not happy with the numbers. I must admit that. And secondly, so far petroleum prices are concerned, so far there is no impact on our polymer prices, and they have been, luckily for us, been stable for quite some time now. And so we don't have any indications as of now that there would be any upward revision in the prices.
Okay, thank you very much.
Thank you, Mr. Mehta.
Thank you, Vikram. We take the next question from Himanshu Upadhyay. Himanshu, please go ahead.
Hi, good afternoon. Yeah, so my first question was, in the last call, we stated that we have gained a lot of insights by expanding our touch points to 2.5 lakhs, okay? And we are trying to improve the quality of our touch points and not just the quantity, okay? So can you give your insights on what you are doing now? Because at the end of this quarter also, we see the touch points remain 2.5 lakhs. So what is your thought process? And secondly, I was doing some study or channel checks, okay, in place of Rajasthan and MP, okay. Even at stationery stores, I found we were not present, okay. So how means this channel expansion of what we were trying to do is that retail point or a general stores, but when we are not present at a lot of stationery stores itself, what is your thought process in some of the states?
So Himanshu, actually it's quite a surprise to know this, that you did not find our products in the stationery shops in Rajasthan and MP, because we claim that most of the stationery shops and more particularly in the prominent cities and towns, Linc or Pantonic will be available. So I would like to speak to you on this on one-to-one, that which were the places where you did not find it, so I can really do the investigation. But it's actually a surprise. Today we claim very proudly that you can find a Pantonic anywhere and everywhere, at least in the stationery shops. So yeah, this is it. So we'd like to speak to him on one-to-one.
Yeah, sure.
And then so far the touch points are concerned, as I mentioned in my previous call, that rather than expanding touch points, we would like to first ensure the activeness of these 2.5 lakh outlets. And so right now the activeness is actually less than 100,000 outlets on a 3 months basis. So we really need to improve drastically on this front, and we are continuously working on this, because this is the basis of one of our pillars of our growth. So that's the reason that we did not increase any new touch points, and focusing on making them active.
And one question, the existing relationship which we had 3 years back, okay, the retail touch points per store, how would have our realizations improved per store? Means, are we seeing they continuing in double digits, single digits? Some thoughts on that?
I could not understand.
So I am saying that out of 2.5 lakh retail touch points,
Right.
there would be, let's say, the initial 1 lakh stores where we were working on, okay, or where, which are older, okay. How have their throughput increased for us in last 3 to 4 years? Some thoughts on
So
that?
definitely, in 3 to 4 years, there has been a handsome increase in the throughput, which is also reflected in our domestic revenue growth. So, but yeah, you can say that in these 9 months of this year, there has been a very, I would say, a mediocre improvement in the throughput, but definitely until first quarter of this year, there has been a good improvement in the throughput. So yeah, so of course we have two ways to increase our revenue. One is continue to increase throughput from these 100,000 more active retail outlets, and also start penetration or making the remaining 1.5 lakh outlets active. So this is how we are going to go forward.
And one question more on the Delhi relationship. Okay, they have a large basket of products, and we have experimented and been doing sales for their products now for nearly 2 years.
Right.
Do you think how many SKUs currently we are carrying of theirs, and how many SKUs do you think we would like to carry for them or sales?
Yeah, so actually their SKUs are in thousands of numbers, but we are handling about 100 SKUs which we have selected carefully, which can actually be competitive in the domestic market, because there are many SKUs or many products which are not competitive in the Indian market. So we have carefully selected some SKUs and working with actually less than 100 SKUs of Delhi. And this is a ongoing process. We identify some products which we feel that they can do well in this market, and then so we keep trying with some newer SKUs, and some work, some don't work. So I would say this is a ongoing process.
And any SKU you expect means to reach 1 crore every year? Means, is there any SKU we are seeing?
There are several SKUs, and I must have mentioned in our earlier calls also that currently the main categories, I would say, would be the calculators, which is our highest revenue generator in Delhi, and second is the scissors. And apart from that, there are files and folders, there are sticky notes, and some adhesive categories. So yeah, so these are some categories, and definitely we identify only such SKUs or categories which have the potential to be at least 1 crore, kind of a revenue. Yeah.
Okay. Thank you from my side.
Thank you, Manchu.
Thank you, Manchu. We have a follow-up question from Pratik Dedia.
Yeah.
Pratik, please go ahead.
Hi, am I audible?
Yes, Pratik, please go ahead.
Yeah. So I see you've added debt this quarter. Can you throw some light? What was the use of that?
Pratik, can you be a little louder, please? Sorry.
Yeah, is this better?
Yeah, okay.
Yeah, I see you've added debt this quarter. Can you throw some light on the use of the same?
Debt.
Sure. Debt, we don't have any debt right now.
Okay, I see 504 crores. You may. This is what
that is actually, we have given a loan to Kenyan subsidiary.
Okay.
And the Kenyan subsidiary also has a outside debt.
So how much is that? That is 5 crore.
वो knock off हो गया
5 crore का है.
So the debt which you are seeing in the balance sheet
is actually Kenyan subsidiary.
Kenyan subsidiary debt which got consolidated this quarter.
And that will continue.
Okay, got it. All right. And sorry, that amount is around 5 crore.
Yeah, right.
Yeah, you're right.
Okay, so that was more of a startup cost.
So that's we last quarter we invested in that company, and it has become a subsidiary. It's a pen manufacturer in Kenya.
Okay, got it.
So
we have invested in a pen factory in Kenya and taken a 60% stake. It is a subsidiary now of our company.
Okay, got it. All right. And the other question I had, if you can throw some light on market
Can
share.
you be louder because it's very difficult to hear you?
Okay, sorry. Is
Very
this better?
soft.
Yeah, you can speak
Yeah.
closer to
Yeah. Can you throw some light on the market share, if you some sense on how where you are placed with the other competition, and if you've gained some market share this quarter or probably over the 9 months?
So our market share is estimated at about 7%. And yeah, as you saw that there has been no revenue growth in the Q3. So I would say that yes, definitely we have not increased any market share in the last quarter. But definitely, yeah, this is the ultimate agenda. Yeah, we have to increase our market share, as rapidly as possible. So, and of course, yeah, the new products will definitely help us achieve our that objective.
Okay, got it. All right, that's helpful. And one more question. So, in terms of Pentonic, how do you see the average selling price increasing with the new product launches? Some estimate, say 1 year down the line, what do you see the average selling price?
I think it will be difficult to really give a number, but as you would see that we are launching 4 products, out of which 3 are under Pentonic portfolio, and they all are 20 rupees, 30 rupees, and 40 rupees price points. So definitely it's going to help increase the average selling price of Pentonic. So we have to see how they fare in the market and which one sells more. So maybe another 1 or 2 quarters, we will be, we can have a better estimation.
All right. Okay, got it. And just one, so you launched the 40 rupee pen, right?
It's already launched now. Finally, after a lot of delay, it was finally launched in January end.
Okay.
And we are in the process of launching it all India. So we will complete it by, next quarter.
Okay. And just initial feedback, how
It's really good. It's a very good feedback, and as I mentioned that we already made one export shipment also of this product, and so yes.
Okay, got it. All right. Thank you.
Thank you, Pratik. Friends, anyone with a question, request you to raise your hand. We'll unmute you and take your question. We have a question from Bhavya Sonavan. Bhavya, please go ahead.
Hi, am I audible?
Yes, Bhavya, please go ahead.
Yeah. So you in your initial remark, you spoke about some kind of discounting that the competitors took place, so went ahead with. So is this an industry norm in the Q3, or was it a one-off that we have seen in this year?
So actually, of course, most of the brands or companies, they keep on doing some promotions now and then, but in last 2 quarters, I saw some higher intensity of the promotions, and more particularly in the third quarter. So the intensity was high, definitely, but I think it is only temporary. There could be some particular reasons behind that, but yeah, it is not sustainable. And nevertheless, we have our, as I mentioned, that we have planned some promotions which will, able to address such discounting.
Okay, understood. Thank you.
Yeah.
Thank you, Bhavya. Friends, anyone with a question, request you to please raise your hands. While we wait for some participants in case they have any questions. Okay, there is one. There's a question from Varun Bang. Varun, please go ahead. Varun, please unmute yourself and go ahead. Varun? Yes, some technical issue that is there. While we fix this and wait for some questions, Deepak ji, in case you have something more to add, although your opening remarks were quite exhaustive. Varun, there's a lot of disturbance in the background.
Can you hear me? Hello?
Yes, I can, but there's a lot of disturbance in the background.
It's some public place, I guess.
Yeah.
So Naveen, actually, I tried to cover as much as possible in my opening remarks, so that, I clarify in advance the challenges which we face and how we are going to address them, and the, update on the new products. So more or less, I have covered, but definitely we are, despite the mediocre quarter, we are quite optimistic because we have a long lineup of new products, in the pen category as well as adjacent categories, as I mentioned. So we are quite excited about, those products. So, yes.
Deepak ji, Prateek has a follow-up question which he's posted on the Q&A board.
Sure.
The Q4 promotion impact on margins?
Not really, not so much. So we planned the promotion in such a way that it will not really have much impact on margins. Yeah, and it may be really quite insignificant. And as I mentioned that we are trying to near recover our exports in the Q4 because we have a good order book and export margins are higher than the domestic margins. So overall, I think we should have a good quarter.
Varun, we'll just try one more time in case we can get through to you. Please unmute yourself. In case this doesn't work, request you to send your question to us and we'll forward it to the management and revert to you. Thank you, Deepak ji, for taking all the questions. I now hand over the webinar to Sanjeev for closing remarks. Sanjeev.
Thanks, Naveen. Thanks, everybody, for joining this call. If you have any more queries, please feel free to reach out to me or to Mr. Dujari. Thanks a lot and have a great evening. Thank you.
On behalf of all of us at SKP, thank you, Mr. Jalan, Mr. Dujari, and Mr. Sancheti for taking time to interact with the investors. Thank you, ladies and gentlemen, for joining us this evening. Thank you very much and have a lovely day.
Right. Bye, Deepak.
Thank you. Thanks to all of you. Hi, Naresh. Hi.